Hey everybody, it's Friday evening. It is March the 12th. It is approximately 7 p.m. Standard Eastern Time, or Eastern Daylight Savings Time, or whatever you call that, on the coast here in Florida. I'm coming at you live from Palm Beach in Florida. And just an hour or so ago, I had a notification from Occidental in my email inbox to notify me of a material event that might impact Occidental Petroleum and obviously therefore impacts us as shareholders of Occidental Petroleum. Specifically, the transaction was a filing that was just filed with the SEC by your favorite uncle and mine, Carl Icahn, and he invoked a Rule 10b-51 in order to execute a trade on Occidental stock. So I thought I would take just a minute or so to explain what the Rule 10b-51 actually is. Sounds very scary. It sounds very complicated. It's actually really, really simple. The 10b-51 rule is something that was implemented some time back in order to ensure that people who are designated as insiders for publicly traded issuers, so insiders are people who have material information or information about the inside workings of a company, just to sort of give you a loose definition of the issuer. The issuer is the issuer who issues the stock, in this case, Occidental Petroleum. In order to restrict them from being accused of manipulating their own stock trades and benefiting from inside information, the IRS implemented a Rule 10b-51, which allows an insider to actually provide advance notice of a trade that may or may not happen sometime in the future. Now, the reason why I say that is because there are a number of different restrictions on insiders doing trades. For instance, the most common thing is probably just a blackout. So insiders cannot trade right now because they're in a blackout. And when that blackout window lifts, a window will open for them to trade. Maybe allows them, 3 days, 10 days, 1 month, or whatever to execute some trades, which obviously already impacts their ability to be able to manipulate the sale or disposition of their equity in the business where they are employed or otherwise have material information as an insider from benefiting from insider knowledge. So that's one of the reasons why we have blackout windows or trading windows that are blacked out. The other thing that you have in terms of Rule 10b-51 is the ability for an executive to say, and I'm just going to make up an example here, I want to sell 1 million shares of Occidental Petroleum, and what I'd like to do is sell 250,000 shares at the end of every quarter. Now, obviously, that assumes that I'm not in a blackout, a trading blackout, and I'm allowed to actually execute trades based on the rules that are in place at that point in time. And the other thing that it depends on are a number of different sets of criteria I can apply to my 10b-51 future trade. And that is to say, for instance, I only want to sell Occidental if it reaches $35 per share. So by way of my example, I'm going to sell 250 shares of Occidental Petroleum every quarter at $35 or more, whatever the trading price is at that time. So as an insider, I've basically pre-announced my intent to trade. I've told you exactly how much or how many shares I'm going to trade. And for example, I've told you I will sell it at $35 or more and no less. So if you keep that in mind, then we're going to have a quick look at this filing that just came in a little while ago. And let's take a quick look here and sort of see what it was that I am referring to. So I said a couple of hours ago or whatever, in fact, 1 hour ago, Occidental sent me an email. It's March the 12th. They said a Form SC13D/A has been filed with the United States Securities and Exchange Commission. And if you go to Investor Relations, you can scroll down, you can see all the different SEC filings, or in particular, you can see this one filing that was just filed this evening, or basically after market close. So what I'm going to do now is I'm actually going to go into that 10b-51 filing, and let me just get myself sort of out of the way here once again so that I don't obscure your view. So this is the Securities and Exchange Commission filing Schedule 13D that was filed today by Andrew Langham from Icahn Capital LP. And you'll notice that his address for tax purposes is now Sunny Isles Beach, Florida. So he fled New York in order not to have to pay personal sales tax, which is much the same reason why I am a resident or domiciled for tax purposes in Florida as well. It is effective as of today. It's March 12th, 2021. And let's see what it says here at the bottom. So I'm just going to scroll down just a little bit. Excuse me. Over here, it says, on March 12th, the reporting persons entered into a trading plan pursuant to Rule 10b-51, which is what I just explained to you. Under the Act, the trading plan with an affiliated third-party broker. Sorry, I just need to take a sip here. My throat's a bit dry. With an unaffiliated third-party broker, right? So who's the broker? It could be any broker. In other words, his preferred broker could be someone at Morgan Stanley, UBS, whatever. The trading plan is intended to comply with Rule 10b-51 under the Act. Under the trading plan, the broker is authorized and directed to sell up to 30 million shares in open market transactions on behalf of the reporting persons, subject to the satisfaction of certain conditions. So I just mentioned an example of a couple of the conditions for you, and he's actually invoked just one, among others, a minimum trading price. There can be no certainty that any shares will be sold under the trading plan. However, even if the sales are completed in their entirety, in other words, if he sells all 30 million shares at whatever the price is in his 10b-51 filing, if the sales are completed in their entirety, the reporting persons would still beneficially own almost 78 million shares with a market value in excess of 2.1 billion, obviously that's at the current price, and would remain one of Occidental's largest shareholders. Then they make the sort of political motherhood statement and say, we continue to support Occidental and we continue to have confidence in Occidental's future prospects. Why do they say that? Because if an insider, especially a material insider like Icahn, who owns more than 10% of the company, starts selling stock, other stockholders kind of get jittery. So he says, we continue to support Occidental and we continue to have confidence in Occidental's future prospects. We also intend to remain on the board. The trading plan is scheduled to terminate on May 1, 2021, so it's a short little window, unless terminated earlier in accordance with its terms. So this is important for you to note as well, because the person who actually files the 10b-51 can revoke it at any time. So in other words, you can file a 10b-51 today and say, I'm going to sell 30 million shares of Occidental at $35 before May the 1st, 2021. And assuming I'm not in a blackout window, I'm going to sell all 30 million shares at $35. So either May the 1st, 2021 happens and the sale didn't take place, which means it cancels automatically. Otherwise, Occidental doesn't need $35 and the trade doesn't execute. Or otherwise, I could just cancel the 10b-51 if I choose to do so at any given time before the shares execute, before a sale executes on my 10b-51 trading plan. None of the reporting persons may exercise any subsequent influence over how, when, or whether to effect any sales under the trading plan, although they are permitted to terminate the trading plan at any time, as I just said. Sales under the trading plan will be disclosed as required by applicable law in public filings with the SEC, including any required amendments to the Schedule 13D. So sometimes what may happen in a situation like this, when you're talking about the sale of 30 million shares, if a sale were to execute and let's say 10 million common shares are sold in the open market at $35, there's a really good chance that Occidental may pull back, $1 or $2 or whatever the case might be. And then, of course, the filing to the SEC would just be to say, we sold 10 million shares. So, guys, it is not unusual for an insider to exit a position to rebalance their portfolio. In fact, for me as a significantly smaller investor than Carl Icahn, for example, because of the run in Occidental. So, for what it's worth, just by way of a little bit of background, I only started making videos on YouTube in, I think it was June of last year, so June 2020. So, I mean, this is like, 7-8 months or whatever that I've been doing this. What happens in practice is when you get an inside situation like this, insider trade situation like this, where it's a big chunk of shares that might be sold, obviously it's going to impact the price. But it's not unusual to do rebalancing. So what I was going to say is this. When I started making Occidental videos, Occidental was trading, in the sort of, I think it was like in the early 20s. It dropped down into the teens. It even went into single digits when it was trading at like $8, $9 or whatever the case might be. And now it's spiked up all the way to above $30 per share. So all the way since I first started making my videos, and you can check back to my old videos. I'm not sharing information with you that I've not shared before. Um, I started off with a few thousand Occidental shares. I now have several thousand Occidental shares, and I've been buying all the way as Occidental was going down, 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 down. Which means when I started doing videos, I might have had just a couple of thousand shares, and now I've got like 7,000 shares or whatever the case might be. That also means that my Occidental position in my portfolio is large, or maybe too large, or larger than what I like it to be, because I also own a variety of other energy stocks. And I've shared this with you guys as well before. I own Energy Transfer, I own Total, I have Enbridge, I have Pembina Pipelines, and of course I have Occidental. So on a regular basis, for me, this is something I actually do almost like on a weekly basis, and sometimes maybe on a monthly basis. I look at my portfolio, and if I have a concentrated position in one particular stock, I'll trim a little. Or if one particular stock has gone down a little, I might buy some more. So even though I'm holding the position long, that doesn't preclude me from trading around it. And one of the ways in which an insider can trade around that is by filing a 10b5-1. So this is not panic stations. I'm just explaining to you how a 10b5-1 works and what the net effect would be of Carl Icahn selling potentially 30 million Occidental shares. And by the way, if he did that, he'd still own almost 78 million Occidental common in addition to all these warrants that he still owns, which he hasn't disposed of yet. So on that note, guys, this is it's not bad news. It's just information, and it's for your education. So this is Rudy for Bester Investor signing off, saying enjoy your weekend, take care, and I'll talk to you soon. Bye bye.